Hello everyone. I hope everyone had a good trading day. So as I mentioned in the previous Outlook video, I was gonna start doing these market reviews at the end of each day. So I hope everyone had a great day. And let's get into Tuesday, 23rd of July, 2024, daily price action. So the first thing I want to note here is that actually this was a no news Tuesday. So as you can tell, lots of choppy price action. So nevertheless, let's just get into the price action. So the first thing I want to do actually, I want to remove some of this price action here. So let's start off like this. So the first thing that I saw when I went to the markets today is overnight we had actually created this new range condition here, which as you can see, I have marked out as a range condition between whether if we want to respect it and go back to the slow, or between whether if we want to deliver higher and take the previous day high, which was Monday's high. So, and if we scale down the lower time frame, you can see that if I just skip a little bit, I want to skip until 8 a.m. is fine. Okay. So you can see that we have this unicorn gap here. So this was the gap of a breaker, and this run higher here was actually formed during overnight. So what does this tell you? This tells you that the overnight ran, and we're probably going to see a bunch of accumulation within the AM session and as well as the PM session. And we'll get to in a bit, but the opening range gap didn't play much of a role within today's price action, but it was insightful, and I'll get to that in a second. So, and by the way, not to forgot to mention that we're trading within this um, gap here, which if you watched the previous video, I mentioned that this was actually another range condition between more lows, eventually slow, or um, these equal highs here. So let's get into more intraday price action within this analysis that we have here. So it will be 8:55 a.m. right now. Let's skip ahead until the opening range gap is formed, or let's okay. So oh, that was an accident. Let me go back. Okay, so we have this unicorn gap marked out here, and as you can see on this candle, it's 8:15. So let me skip one more candle, and then another one. So we can see the 9:30. It opens and it creates the opening range gap low and the opening range gap high, which was the 4:15 Monday's high, and you can see we have this gap here now. Um, the thing about this is that the 9:30 Judas swing drew just away from the gap. So if we go to the 1 minute time frame, you can see that 9:30 opens, it creates the opening range gap, which was from here until this orange dotted line here, and that's your opening range gap. And then what you see here is that price trades away from the opening range gap, and we have this clear manipulation lower, leaving an inversion. And actually, I know some people who trade this way, where they take this inversion here, and they have their stop or close back below the inversion, and they target the opening range high. So, I mean, yeah, the opening range high. So it will be like that. So a one-to-one trade, and as you can see, that hits. So it's a it's a decent model, but you won't get too many trades, and the trades that you get are not always going to work out. So this is a high probability, but it's nice for when you have a clear manipulation and the Judas is away from the opening range gap. Another thing that I want to mention is that if you actually look at the 830, so 830 shots the move lower from here, notice we also manipulate at 830. So I was not actually anticipating 930 to be another manipulation. I was anticipating a 930 just to be a normal run higher with some injection of volatility since it's the equity open. Granted, that did not happen. We got another manipulation, which was kind of weird to see because we had the first manipulation here, the 830 manipulation, and another manipulation, which was 930. But the only difference between them is that I feel that the purpose of the 930 manipulation was to fill smart money, fill equities in. And the purpose of 830 was actually just to take out liquidity that was formed within the overnight run higher. So, and forgot to mention one other thing. I think it's in the 5 minute time frame. Oh yeah, so from within here, you can see that the range condition that we had on the 4 hour is being heavily displaced through, and marginal liquidity was the range high. And I was hoping for something on the lower time frame, which I'll get into right now. So see if we go on the let me go on the 5 minute. I think it was on the 5 minutes. Yeah, so what was happening here with this range condition? So let me check that back in. This is a very important point. So okay, so what was happening here is that when this was happening, this range condition here, also if I go into the 15 minute, you can see, let me draw out this range here. So you see guys, this range here, the array at equilibrium was this fair value gap here. And I presumed this was the range condition for this range high being met. And what I liked about the movement within here is that you can see we have usually run lower within, and then we have a down close candle, and then we have a real move higher. So this manipulation here serves as a great framework to base off of. So you can see it creates kind of a breaker framework. So if you look at, I think I saw that more visible on the 5 minute. Yeah, so here, so you have a high and then a low, and then eventually, oh no, we have the low and then the high. Well, oh yeah, here. Okay, so we have the low, a high, and then a lower low, and then the higher high that gets formed, within giving us a bullish breaker. So it's nice to see the bearish manipulation within that. I got confused because I was looking at a high, low, high, high, low, low, but the lower low was actually a turtle swoop. Sorry about that. So yeah, so basically the down close candle within the fair value gap was nice because it gives people a initial hope that we're going to run lower, and then it completely cannibalizes them and takes them out of the marketplace. So that was nice to see. And another thing that I had mentioned, if you guys watched the live, this will move lower here. It was a presumed order block, so I was anticipating that move lower to become an order block and then be used to support price and then eventually reach to range high. So what I wanted to see is price move into the presumed order block, and then there would eventually be a fair value gap here on lower time frames, and there will be another range condition. And then what would happen here is also I would have liked to see something like this, and this gives another bigger form, so low, high, low, low, high, high, and yeah, so the final delivery to previous high. And another thing I want to mention here as well, if you guys noticed, so you can see we have a high, a low, a high, a low, low, and then eventually a higher high. So this is another breaker. So taking the retrace of this would actually be taking the breaker here. So you can see, there's another breaker as well. And what I call this, and many people call this, is the abs 2 breaker. And yeah, I wanted to see a retracement to it inside the order block. There's this move lower, overlapped, and then also discount of that range. So let me go back on the 5 minute, and let's skip a bit forward so we can get caught up. So you can see what happened here is that once we created the order block, initiated the breaker, formulated the breaker, and also we filled the opening range gap. I think price was now more freely price was more free to move higher. And let's see what happens. Here, let me go on Dow. This was around 9:45. I think I mentioned something about the Dow here, or did I not? 9:45. Oh yeah, here. The one thing I didn't like about this setup is that how the Dow was failing to follow the Nasdaq, and as you can see, how the Dow was kind of chopping around, not moving, and then after the move of the Nasdaq, you can see price begins to pick up the pace of Nasdaq and then sweeps up this engineered liquidity here. Okay, so basically, let me get back to what I was saying. Let me draw out the equilibrium of this range, which I was anticipating a retrace back into. So you can see this move run here, this run over here fails to mitigate equilibrium, but you have to be patient and hope that we get that move into the equilibrium. So as you can see, we have the PGM order block, we have the abs 2 breaker, we inversed the range condition and on the 15 minute, and if you go on the 4 hour, you can see we're heavily displacing through the initial range condition, which supports a strong liquidity idea towards this high here. Pair that with a 15-minute one, which correspondingly aligns with the 4 hour one. You can see we have the range condition here, and we already delivered to the strong liquidity, leaving the abs 2 breaker. And noting that the strong liquidity is still higher, we can expect this abs 2 breaker to work, because if it was not higher, then this breaker formation, which would be taken as high, would have been turtle soup. And another thing that also confirms this being a breaker is the displacement we get through it, and the type of retracement we get back into will also land into a presumed order block. Not presumed, it is now an order block. So yeah, what I was anticipating is that price moves back into this order block, into the abs 2 breaker. And let me mention one more time why I anticipate this breaker to work. First reason was because a higher time frame drawn liquidity and foundation allowed it to work, and allowed it to serve a purpose of delivering us higher. And also we closed through it with displacement. I wouldn't have liked to see it do this and then close above the high slowly and then start spacing lower, because then um, that would change the idea of it being a turtle soup, and then my drawn liquidity would be wrong, and then order flow would be, I would be on the wrong side of order flow, and that just wouldn't be nice for anybody who did any technical analysis today. So a quick recap on what's happening right now. Unicorn gap supporting us higher, range condition inversed, range condition on the higher time frame, getting spaced too heavily, range high, which was the previous day high as well, from this range condition. Abs 2 breaker, displacement through breaker, no turtle soup, not clear manipulation lower, double manipulation actually into the same gap. First manipulation to sweep liquidity, second manipulation to mitigate orders, and then we also have this move lower here, which is an order block. And then, by the way, some of you guys might ask, oh, isn't this run lower here a mitigation zone? Well, No, actually, because it sweeps this candle's low here. So it's not a mitigation block. A mitigation block would be something like mitigation block would be, find an example here. Here, this would be a mitigation block right here, because you can see it doesn't sweep any form of liquidity. So this run higher here is used as mitigation later on and then delivers to the range low. So let's go down to the 5-minute time frame. You can see we got arbitrage to equilibrium, and then we're starting to see some movement higher. So remember what I just mentioned about what I wanted to see forming a breaker foundation. So something like this, and then a move higher, and then another sweep, and then another move higher. That will give us the high, the low, high, low, low, higher, high. Let's play it forward and see what happens. That's the initial mitigation. If we go on the 1 minute, I actually took this because there was a SMT here, and I entered on, where is it? Yep, I entered on this candle's close here, and I had my stop on this Nestor block low, and I had my take profit on just above this range high for a 1-to-1. And what ended up happening is actually we SMT'd, wait, we SMT'd this high here. So here, I'll show you what happened. So you can see price reached lower into this fair value up here. Put that in red. So you can see it seems like it's holding, pushes back up, puts me in a bit of profit, gives me a bit of hope. And something I failed to realize here is that actually with this run higher, it SMT'd the range high. Let me put it here so it looks more neat. This run higher here SMT'd the range high, and this should have gave me all of the confirmation I need to know, okay, get out. This is not the best conditions if ES is pushing heavily through it. So if I go into 1 minute, this time was around 9:45. So where's Tuesday 9:45? Up here. So you can see like this run higher here completely took out the range that I was aiming for, and then obviously after this, we got that big dump lower, and obviously I did not see this happening. I saw it happening in hindsight, and I mentioned that's why it probably didn't work. And then what happened is we went and we took these initial mitigation lows, and then we actually reached into another mitigation block here. And I didn't think this was significant because it was honestly too deep for my liking. I didn't expect this fair value gap to hold and still reach into this mitigation block here. But now, obviously, in hindsight is a beautiful drug. You can see that this is the setup that actually ended up playing out on the 3 minutes. So here, so initial mitigation low swept, and then let's play forward a few candles. You can see we mitigate, and then we start trading higher, and then we create this gap here. So let me minimize this here. See if we create this gap here. Let me delete this, delete this, delete this. Create this gap here. We inverse it. Does that close? Okay, so there you go. It closes there, and then your stop would be below. Your stop would be a close through this candle here. Your stop would be a close through this fair value gap, because if it does not inverse it again, the entry ID is still valid. But as you can see, the risk reward is too steep for my liking. I did not take this. Another reason why I didn't take this was because within this time, 10:06, if you look on the Dow, where's 10:06? 10:06, 10:06. Yeah, 10:06 here. Around this time, the Dow was pumping. The Dow was really going higher, and oops, no, I don't know what I'm talking about. Hold on. Yeah, within this time, the Dow was not following what the Nasdaq was trying to do. So I just sat back and I studied. So I had the position in mind, and an validation point would be from this close to that. So I mean, just for fun, here, take profit there, and my stop would be close to this. So if we play it out a bit, okay, so you're put into some heavy drawdown, you almost get picked out, and then we start. I mean, yeah. So we almost close through it, but we don't. Then we start. We respect the consequent encroachment. Of course, the wicks do the damage. The bodies tell the story, and then you can see we start rejecting heavily off of the gap here, and then we deliver to the range high, which was my original take profit. And that was honestly the only move that I had my eyes on today. Nothing else that I wanted to happen really played out. So if you come here and you take a look, you can see that we had a small retracement here. I thought maybe if we wanted to move higher off of this retracement here, then we would have reached higher towards the drawn liquidity, which I have at these two highs here. But of course, that nothing plays out. I mean, not nothing plays out. This would just have been in a fun, fantastic world. Go for a retracement here and then another move higher. But again, this is too clean, and a lot of retail traders will have been sorry. Yeah, so I wanted to see something like this. They move into premium of this range. I mean, to a discount of this range. Back into this move lower here, which would have been mitigation block. I mean, order block, and then start to move higher off discount. And then obviously that did not happen. Um, I think one of the main reasons was because within that time, the 4 hour gap, which was right, yeah, right here. Let me actually unhide it for minutes. The 4 hour gap was still not inversed. So if you go on to the 5 minute, you can see price is still rejecting lower off of this. Um, you know, in another world where price rejected off of this mitigation block here, um, that would have for sure inversed this 4 hour imbalance, and we would have had a clear as day drawn liquidity on these two highs here. But as you can see, since the 4 hour gap held, um, we don't respect this 4 hour. I mean, this mitigation move lower, and we displaced through it heavily. So there was no entries here. And then for the rest of the day, kind of accumulated a bunch, and there was nothing really to trade during the period. So that's basically it for Tuesday. Tuesday's market review. But something that I saw interesting happening was if you guys watched the last video that I created on the week's outlook, you would have known what I said about these levels here, especially this gap as well here, the weekly opening, and how we react within this gap. And whoever watched that video understands, the second idea that I had looks like it's been playing out. And I think we're gonna dig down into the weekly open a little bit more. And as I said in the previous video, both of these ideas make perfect sense. Both of these ideas have valid reasons for why they would happen and what's the underlying narrative behind them. They wouldn't just be random. Yeah, they wouldn't just be random. They wouldn't be random price action movements. They would happen for a reason. They would happen because they are predetermined to happen. And what's looking like it's predetermined to happen is that we're going to respect this unicorn for value gap. This plays lower, and I can I have a really strong draw towards the weekly open and to fill the opening range gap. So hopefully we can see that happen in the foreseeable future. And something that I want to also note out here is that I just take a time frame. Today is 23rd, right? It's 24th. See, we have this newly formed end dog here, which could probably see a trade into overnight, leaving some low resistance liquidity that could be possibly taken out within the move into it. So something, oops. So something like this, create a bunch of low resistance overnight till we can trade into it. And then you get some kind of matter due to swing and second stage manipulation. And then we start trading lower, take out the low resistance and then trade into the weekly open. And then fill the opening range gap low. And then we'll see whatever happens from there. But this is in a perfect world where everything works out like it's supposed to. And don't forget this point. If we inverse this gap here, if we create all that low resistance and trade back into the end dog and then dump back low and then find more support at this fair value gap here, what was the point? Understand? So yeah, that's just some of my insights. And today was an interesting day for price action. And I learned a lot from today. And I hope you guys did too from price action from this video. And yeah, that's all I want to share tonight. Okay. Good night, everybody. And I'll see you all tomorrow.